There are two types of investors in the world. The first type is a retail investor. A retail investor. A retail investor is a small investor who does not have very much money. Like the average person who is working at a job making like minimum wage or the average wage or even higher than that is called a retail investor, because they go to a brokerage or an investment advisor and they can't get very good service. They pay high fees, they have bad investments, and they just get kind of their money stolen. So that's a retail investor. An institutional investor. Institutional investor is a big company that is managing money for other people. So these big companies can be like mutual funds, hedge funds, investment advisory firms, and they can actually take a bunch of retail investors and put them in a fund and then go get investment advice as a institutional investor. And they're supposed to be getting good service, but usually they just get ripped off also. So, where can the retail investor go? The retail investor, the small investor, can go to a brokerage. A brokerage. A brokerage is it's a company that will buy and sell stocks and bonds for the retail investor, and they charge a commission. Usually it's $10 now for the internet brokerage. But what about a person who has a lot of money? Let's say you have millions and millions of dollars. Well, then you can go to something called private wealth management. Private wealth management. Private wealth management is for people who have usually a minimum of $250,000, but often it's $1 million, and they're supposed to be getting good service. But what ends up happening is they just get like their money kind of stolen, or they pay high fees, and it's just a mess. So both the retail and institutional investors getting bad service, and even the rich people are getting bad service, because the whole investment thing is just a disaster.